What's going on, guys? Brian's here. Today is Sunday, April 2nd, 2023, and this is the continuation to the weekly recap from last week for the S&P 500. So we're reviewing the March 27th, Monday, all the way until the March 31st, which is the Friday. The first video, I decided to stop it right here. This is Mila Notes. This is how I've been organizing a lot of my life lately, and I decided I'm going to start using it for YouTube also, as it can kind of keep me on track. Now, I didn't realize I spent a decent amount of time here just because there was so much information to unpack. So instead of publishing a video that was too long, there's still so much more to go over. I decided to release that as part one, and now we're jumping straight into part two to this video. So we will jump right into it and pick up where we left off, now starting with the Monday. So what we have is the Quant Trading App levels. If you're not sure, make sure to watch the part one of this video. So what we have is the Quant Trading App intraday levels right here, and then we have the weekly levels, which are standard for the QTA members. QTA is just short for Quant Trading App. And as let's open this up here, nice and full screen, and then let's actually zoom in. So what we have is market opens up here and then it sells off. We have a decent amount of Confluence. This is pretty simple, pretty textbook Quant Trading App stuff. Market sells off into the weekly midpoint. So that's what this dashed gray line is in the background. So we have Confluence number one. We have Confluence number two. This is what's referred to as the intraday zone. And then lastly, we had a decent amount of gamma, if I remember correctly, at that level. And then we have max pain down here as a potential level also to get long. So there's a decent amount of confluences in this region. We also have a gap fill because this is where the market closed last week. It gapped up, so it came back and filled this area. So a decent amount of reasons to look for a long entry. So if we actually jump forward here, this is just a screenshot from Thinkorswim. So I'm doing the recap videos in TradingView just because we can retroactively go back and actually see what the levels were during that day. Whereas on Thinkorswim, as the next day opens, these levels disappear off of the chart, and then we copy and paste the code just to see the levels relevant for that day. So down here we have what's referred to as the 2-day anchored VWAP. So it wasn't really in play. That's also what's down here. So it was not in play on Monday. But there's a decent amount of confluence, as you guys can see already here, to look for a potential long entry. On top of that, what we also have is this was the VIX. So the VIX is a measure of, or proxy for implied volatility. As we zoom in, we can see that the VIX gaps down, which makes sense because the SPY gapped up. And then we can see the VIX retraced. Where did it start meeting rejection? Right at the weekly midpoint level. So this is also straight from the Quant Trading App weekly script. We can see sellers started coming in here, and then implied volatility ended up decreasing. And then as the VIX was going down, that's usually an indication that the markets will go up. So we can see that here. So we have a double confluence. Now, how do we trade this? What do we look for? Obviously, you can just get long a futures contract. You can just buy a at the money call option. You can, run a put credit spread. There's so many different ways to use this information, but I just wanted to share something that I did. So I took what's referred to what I've been calling a twin fly position off the lows on the SPY, was basing out at the intraday zone with the midpoint confluence, blah, blah, blah. What exactly did I mean? So let's scroll down here. I wanted a position that I wouldn't be babysitting, as I had other obligations to do during this day. So I wasn't going to be monitoring it. I wanted to keep my risk pretty low, and I wanted a high probability of success. So the visual cue, keeping it simple. So why did I run this trade? We have the visual cue. SPY is hitting these levels, so that caught my attention. So SPY hit the intraday zone plus the midpoint confluence. I thought about buying calls, but I wasn't sure, as the momentum for the day wasn't really strong enough. So I didn't want to buy calls and have to worry about theta, as the market, as we can see, it was selling. It was moving pretty slowly on Monday, and this sell-off wasn't really that aggressive, and then it was pretty choppy here. So I didn't really want to just buy calls and then again have to sit in this position and then just watch theta decay away at the options. So then we have didn't want to deal with the time decay. Didn't want to go with an out the money butterfly because I didn't have high conviction. The 3960 for the 0 DTE SPX GEX was important. So was the 4000. So just targeted both areas, right? So again, the market is open here, so I don't have time to actually, type out. It's not very articulate. It's just trying to get the information out pretty quickly. What exactly did I mean by that? Let's scroll here, and this is the position in which I ran it. It's what I call a twin fly. It's just a long put butterfly and a long call butterfly, combining both of them. And as long as the SPX stays within this region, I'm pretty much profitable. You see my break even is 40.10, and then my sell zone down, the break even on the lower end is about 39.50, all the way up to, we'll say, 4.10. Now, where do I get those levels from? It's straight from these gamma levels right here. So this is where the SPX is as I'm deciding to open up this position. What I noticed is that there's a ton of absolute GEX right here. I would encourage you guys to watch the first video if you hadn't seen this, and as I broke down how I use some of this information to take swing trades. But what we have right here is 4,000, pretty powerful gamma level. We also have 3,950, pretty powerful gamma level. So the assumption would be if the market was to actually rally, it would probably stall out around here. And then at the same point, if the market was to sell off, it didn't really look like there was that much negative gamma below the level. It didn't really look like there was anybody being very aggressive for this day. And that in a sense is the edge in which I'm using. I'm pretty much thinking it's just going to be choppy around this level. However, it might gravitate towards this level or it might gravitate towards this level. The reason I circle this is just because this is a little bit of a quote unquote gamma hack, I would say. It's just when you have a bunch of positive gamma and then you have one negative gamma strike, the combination of these two tends to act as some sort of key support or resistance level. And then we also have this blue level on the back of my chart here is max pain. This is for the 0 DTE strikes. So everything we're seeing here is just straight from the 0 DTE options chain. If the SPX was to go up, I didn't see reasons strong enough yet to think that it would go past 4,000. And then if it was to sell off, I didn't see reasons to believe that it would actually go below, you know, this level or this general area right here. And that's why if we come back up to this, you guys can see this is a reflection of it. If we did sell off, I was expecting it to get pinned around 39.65. If we were to go up, I would expect this to get pinned around 4,000. And then how did that actually play out? Let's just jump back right here. You guys can see where the markets actually went. Sorry about that. Let's actually just check TradingView. We can see by what it did is it bounced, it's got stuck around 4,000 and then we sold off and then we ended up coming right down to 39.80. So it ended up closing around 39.80, but I was sharing that I took, at the time when I shared this is when I was taking profits. I was just showing that I took about a 25% return on, net return on this position. And then if we scroll down here, for someone that doesn't want to run something that complicated, I was just sharing that as the SPX, so again, as we scroll out here, we have, this is the Monday. So we have, as the SPX is here, you can obviously just think to go long, and that's keeping it simple. So if you're going long here and you don't want to buy a long call option, the alternative would be to just grab a out the money butterfly, and that's what this is right here. So this butterfly will be targeting 4,000. So instead of running both, I ran both because I didn't really have that much conviction. And then I also was aware of the fact that we have, let's go. We had the 2-day anchor VWAP was down here, and the 2-day anchor VWAP was in confluence with the max pain level. I was expecting this to rise up, so I thought we would have stalled out down here. I wasn't sure if we were going to sell off to here, and I didn't really want to get stopped out of a out the money long call butterfly. So I went with both, but obviously more money would have been made if I had just chosen to go north, as I call it these days. And in this case, a spread like this is $2.20, so not really that expensive. And then you can see there was no drawdown from entry. It just bounced around a little bit, and then by the time the SPX had actually hit close to 4,000, the spread was up over $4. So a high of 650 before ultimately closing around $5 or so. So that's Monday. Different ways to use this information, right? And as we jump, simple enough. If we were to summarize it, we would just say the SPY hits the intraday level right here, caught my attention, found enough confluences to decide to take a trade. And that's the way I encourage you guys to do it. If the SPY didn't hit that level, then probably wouldn't have taken a trade if I didn't see any other type of confluence. Now we're on the Tuesday. There's a decent amount of information for Tuesday also. So this happens to be one of my favorite days, or we can say my favorite setups, because I know the income is going to be made very quickly. The SPX gapped down, and this gap down, it gapped down into this very high congestion area. What we have is max pain, we have the weekly midpoint level, we have the 2-day anchor VWAP is right here, we have all this consolidation, and that's the days where I like to run at the money 0 DTE iron butterflies. So if we were to check out the next slide, this is just zoomed in right here of the SPY. You guys can see this right here, a decent amount of congestion around this chart. And what I posted pre-market, so 6 minutes before the market opened, I said I like this range again on the SPX. I'm just sharing this is the Discord channel in which this is sent from the QTA. 0 DTE GEX. I'm scalping an at the money. So again, this is before the market opens. I'm just saying I'm scalping an at the money iron fly, most likely 75 points wide at the open, looking to lock in about $2.25 per unit. Then opening an at the money fly on the SPY roughly 20 to 30 minutes after the market opens, depending on price action, and planning to hold until after lunchtime. So the breakdown of this is relatively simple for myself. This again comes with a little bit of experience. For some of you guys that might be new to Quant Trading App, this, if you're really looking for a trade or a scalp at the open and you have a margin account, this is what catches my attention. We have the spot price is right next to max pain. It's also right next to absolute GEX. All of these three things lining up pretty tightly. We also have this key gamma level right here, and then we have these key gamma levels right here. And again, the spot price is right in between. So essentially, I'm thinking it's just going to ping pong around this level, at least for the morning session. Now, because I'm scalping this trade, I'm probably not even going to be in the trade for 5 to 10 minutes or so. That's kind of my ideal sweet spot. You can hold this all day, but sometimes you don't want to have that much risk out. So the trade that I opened up was the, let me jump to it right here to show you guys. So this is the position. So when you're running at the money credit spreads like these iron flies on the SPX, obviously it's going to use a decent amount of capital, but you're looking to get in and get out. I'm showing the return about 5 minutes after the market opens was about a 3.7% return, which is usually what I average that I look for. So anything around 3.6 to about 4% return. You can get a lot higher return if you hold until 10 a.m., but I generally like to be out very quickly as I'm intending it to be a scalp. The assumption again is that the markets will be pretty choppy in this area, and as we can see, it was pretty choppy. We just need it to be choppy for about 5 to 10 minutes or so, but if it's choppy for about 30 minutes or 40 minutes, then obviously if you're holding for that long, you're going to end up with a lot of gains. I know a couple of you guys held it until the close. This was amazing to see some of you guys trading this type of way, because I know you're coming from a background when you guys are trading very directionally. Some of you guys are new to even trading spreads, and you're kind of grasping this pretty quickly. But if we jump back to this right here, so the 0 DTE flies locked in about 30% return on this, on the credit received right here. And this was leaving one runner until the close, because still was thinking that the SPY would end up closing right around where it opened, and that's exactly what happened. The reason I knew that from before pre-market was likely to happen, I didn't know this is exactly how it would play out. I just knew it was a likely scenario that it would happen. It's all because of what I saw from Quant Trading App sending to the Discord before the market opens. So whenever I see that, just so you guys know, I'm generally going to be trading the same trade. I do it every single time. I'm not thinking about it. I'm just getting in, getting out, and then I'm rolling some of that profits into the SPY. And go about the day, come back and take profit. You can put in a hard profit target also within Thinkorswim. So as we continue right along, by close, we can see obviously the markets ended up pinning pretty much right around this strike price. I ended up doing a one-on-one with one of you new guys within Quant Trading App, and you're asking, why did I go with 39.75? And the answer was pretty simple, as I remembered pointing out to you. I said, if we come back to the, actually, I don't have a screenshot of the SPX, so let me just jump over to TradingView, and we have this right here. Where did the SPX open? Right here. It opened right at this level. So if I were to draw this on the chart right there, that's essentially the open. 39.74, we'll say. So by the time I opened the trade, it was probably about half, or maybe about 5 seconds, not even, after the market opened. I got filled around there because that was the at the money strike. I didn't really care. It didn't matter if I went with the 39.75, if I went with 39.70. The results were going to be about the same, and I was not intending on holding the SPX until the close. But even if it did end up closing exactly where I was targeting, being 5 points off in the SPX is not something that I try to pick. As long as it's in a general ballpark around 10 or 15 points or so, it's more than enough to be profitable on a 15-point or on a 75-point wing butterfly. There's plenty of room for profitability here, so it didn't really matter to me. I just wanted to get in with the at the money strike, as I said I would from pre-market. So this ended up working out pretty well. But as again, I held the SPY and not the SPX until the close, and I know some of you guys held the SPX until the close, and it was amazing. Congratulations, it was amazing. I was very happy to see that. As we continue right along now, this is now the Wednesday. So Wednesday, even easier. This is a case where the SPX just gapped up right into our absolutes gamma strike. Now, we know this area to have a lot of liquidity. We know this area to be pretty choppy. So the play was essentially pretty simple here. I just ran with an at the money 0 DTE SPX butterfly. So essentially the same thing as the previous day. as I didn't have the same amount of conviction as the previous day, because the previous day had a lot more confluence. There was also max pain, there was the weekly midpoints. This is the end of the week expiration max pain. It also had the 0 DTE max pain. It had all the signs and all the confluences needed to be very confident to think that the SPX would not go anywhere. However, on this day, I did not have the same amount of conviction, so I didn't trade with the same amount of size. I was looking to get in and outs, but as you guys can see, ended up being a 4% return right here, and this was only 6 minutes after the markets was open here. So this is now Eastern time, because I'm bouncing between Eastern time and Pacific time as of lately. So some days I'm in New York, other days I'm in California. So it's just bouncing back and forth, and that's the time zone differences that you guys are seeing. But we had a little bit lower IV on this day, so there was a little bit less credit that I'm usually like to receive. I used to have a rule in which I would only trade these if the credit received was over $30. But the VIX has been dropping, so now I'm still pushing myself to make sure to track or at least run them on days in which I think it won't work. So I actually took a loss on Friday. We'll get to that in a second, because the premium was so low. I think it was about 18 bucks is how much I got. And as you guys can see, the credit is much higher, but even this is relatively low based on what we've been seeing. I even got close to about $38, $39 in credit last week and the week prior, if I remember correctly. But anyway, wanted you guys to just be aware. Again, this is straight from my journal, straight from my notes. This is how fast the trade works. So in a sense, I'm getting in right here, and then I'm out as soon as I hit my profit target, which is usually around $2. And if you held until about 10 a.m. So this is holding a little later in the day. There's a little bit of a drawdown, but you can see ultimately by the close, the SPX still ended up pinning within the range of the butterfly. As we continue right along right here, this is the, what day is this? Oops, slide is in the wrong place. Let me continue right along. Sorry about that. Okay, so we're on the, nope, we're not on Tuesday. We're on Wednesday now. Sorry about that. So let's scroll down here. And so we just looked at, I also had a question within the Discord about why did I go with 405. In this case, the reason I went with 405 is just because, let me see if we have the SPX. So this would be the SPX. The SPX opened at 407. This was absolute gex. So I went with 405 because I thought, even though it opened and it was pushing up, I thought we would have pulled back a little bit sooner. I wanted a little bit more short delta. So I wanted to have I wanted to compensate in case the markets tried to pull back, because as you guys can see, max pain was here, absolute gex was here. So I actually thought we were going to pull back a little bit sooner. It actually pushed up before pulling back. So this was a little bit scary at the time, but that's the reason why I went with 405. But I was trying to show that it didn't matter if you went with 405 or the 410. This is the 410, which would have been the safer strike in this case, because 410 would have been around here. So that would have been more closer to, opening here, how that would have worked out. And as you guys can see, it wouldn't have made that much of a difference. It would have equally worked just as fine. You would have gotten the same $2 or $1.60 or something like that would have been the profit. Or if you decided to hold this one until later in the day, it actually didn't have nowhere near as much of a drawdown. So I was just comparing. Again, this is how I take my notes, trying to see what I can improve on later. It's only because of doing this after the market's closed do I gain this type of information and knowledge and then improve on it the next time. So as we continue right along, we can see that this is what I ended up doing after the 0 DTE iron fly. I did run a out the money 0 DTE put fly and put butterfly, and that's because I was targeting 39.75. Now, why was I targeting that? It's a lotto play. I'm just saying I'm targeting max pain. So if we come back, where was max pain? Max pain was down here for the 0 DTE. I don't think there's a screenshot of the gamma. So just so you guys know, it's just like this. I don't have the screenshot here within this presentation, but just know I know where the max pain is. It's sent straight to the Discord. So exactly where the max pain was, I decided to say, hey, let me just, while the SPX was here, let's just see if we're going to actually pull back to max pain and maybe pin around that level. However, I said that 40.30 on the SPX, it looked attractive, but I'm not interested after the gap up. Now, why did it look attractive? So this right here, as you guys can see, where did the SPX end up closing? At 40.28. So we'll call that pretty much that's 40.30. How would I know early in the day that, that looks attractive? What made me say that? If we come to the gamma profile, oh, here, I actually did have a slide. So this is the max pain, 39.75. So if we come back and I said, I'm targeting 39.75, that's down here, max pain. Why am I targeting, that's all the way down here actually, this is 39.75, so why am I targeting all the way down here? We can see this is the 2-day anchor VWAP, we have a large gap. I'm thinking we're probably gonna head down here as a lotto because no one would expect that to happen. We'd have to get past all of this key gamma levels here. But in this case, I was aware of 40, 35, 40, 30 because that was the absolute gamma strike. And then on top of that, you guys can see these two gigantic pillars right here. So this was the current spot price when this screenshot was taken. We're also in a positive gamma environment. You see, so the net GEX is positive. This 0 DTE expiration, as it says right here, is also positive. We also know it's positive because there's no red on this picture right here. If these bars are red, it means the overall net GEX is negative for that expiration. So the combination of knowing that we're in a positive GEX environment, there's a couple of really high positive gamma strikes with the absolute GEX being up there, the thought process is that's probably going to act as a magnet and strike, and price is probably going to want to go towards those strike prices. I was looking for the lotto because I was not going to be trading for the rest of the day. I had a lot of risk on early in the day, and it was very scary early on in the day actually for some of my at the money iron flies. So I really wanted something that was low risk to make sure I wasn't making an emotional decision. So I just figured, hey, let me just throw a lotto out there and see if I end up getting out with a couple extra $1,000 on the day. As you guys can see, it didn't work out because the SPX actually went to this level. However, I was already aware of that. So what I made sure to say in this case here was 50% is always a good first profit target. So this is actually where I was looking to take some profit. I made sure to share it with some of you guys in case you were taking this trade with me. How did I know that was a good place to take profit? Also, if you guys see, this is at 7:55. Pacific time. If we look at where was that was right here as the SPX was hitting 405. So 404, 405. Because already aware, it's kind of a pipe dream to think we're going to break past this level and then break this level and then get all the way down here. There was no real aggressive selling early in the day. There was no other signs. On top of that, we had this level here, the previous, the high of the week, the previous high of the week. So this was likely to act as support. So those are my reasons to look to exit the trade. And sometimes it's something that you want to do. Just because you have one trade, there's no reason to think maybe take some profit a little bit sooner. Don't hold it even if it's a lotto. Those are things that I will make adjustments as new information comes along. Okay, so moving right along now, let's jump over to the Thursday. So what we have is Thursday. This is a little bit simpler. Again, the reason for the at the money iron fly is because I've mentioned this the past couple weeks in some of the QTA recap videos. You guys know if the SPX gaps up into the sell zone, I'm going to look to run some sort of at the money iron fly. We'll usually give it a little bit of a negative delta just because I think it'll probably pull back just a little bit, and that's what we ended up having here. On top of that, if we zoom in, we can see that's the, as we scroll down here, this is the SPX. So where did it open? At 40.65. What was the iron fly that I ran? It was 40.45. Sorry, I actually screwed up those strike prices. Let's just scroll back up right here. The SPX opened at 40.46. So I open up my at the money iron fly at 40.45. And then usual profit target here. This time it was actually 4.3% return. And you guys see the exit was at 9 minutes after the market opened, so 9:39. Again, this is Eastern time. At this point, I was in New York. My traveling schedule is a little bit crazy right now, so again, as I said, I'm bouncing around a lot, and I'm still able to kind of squeeze these trades into my schedule and get in and out, which is why I'm also sharing this, because even if you have a full-time job, if you have a bunch of other stuff to attend to throughout the day, you can still take advantage of these. It generally doesn't take that long for me to decide what I'm going to do. All I did was just see that we gapped up, we were in the sell zone. I will run it almost every single time. I don't think this day I actually double checked the gamma exposure, as I really wanted to just get in and out. But usually that's not the only reason to run the trade. It's just if the gamma exposure coincides with it and it shows max pain and absolute GEX is also there, it just means I'll probably run more size if there's not the same amount of confluence. If there's not the same amount of usual confluence, then I will decrease my size. I'll maybe run 1 to 2 units tops, and that means I'm just really looking to get in and out. If there's more confluences, I will run up to 3 or 4, or I will definitely also run the SPY simultaneously with it. So what we have right here is this is the trade, and this is the duration of it. You guys can see by close, it ended up being another monster winner. I did not hold this until close, but just sharing with you guys what type of returns you can expect if the market ends up pinning around these strike prices here. As we scroll down, we have, this is the 40-50. So this is just showing the comparison between the 40-45 and the 40-50. Why am I comparing those two? Because if we jump back to this chart right here, the SPX, we can see that the market actually pushed up. So let's just say you got filled a minute after and you went with the at the money, you would have been selling the 40-50 iron fly versus the 40-45, which is what I actually sold. But you guys can see there isn't really much of a difference right here. Both ended up being a win. As you guys can see, there was no drawdown on the trade if you held for the whole day. Or if you're looking to just take profit pretty quickly, there's also profit instantly. And then the same thing here. In this case here, the profit comes pretty instantly. At the close, you guys can see that this is what the profit is right here. So about 32% return on margin. And then the other one is a 30% return on margin. So the other one ended up being a little bit better in this case if you're looking for the pin. But that's not something I would encourage you set your whole business model around trying to pin the SPX every single day, because that's not a viable business model in my opinion. And lastly, we have Friday. And what we have is a little bit of a gamma squeeze on Friday, right? So we're going to, I think that's the last of this, and let me zoom all the way out so we can just review everything we just looked at, because I'm going to show you guys some of the gamma on the Quant Trading App site, but I want to jump back and just highlight this from the first video here. We were aware of where the SPX was going to be from a week prior, so these were some really nice swing trades. Check out part 1 of this video to recap that. But as I actually scroll to this right here, I'm going to show you guys something. This is early in the week. This is absolute gamma, this is absolute gamma, this is absolute gamma, this is absolute gamma, this is absolute gamma. So this is just strong and powerful and dominant, and it was also sticking out from the previous week, and you guys can see how the market's traded this week. It just naturally went up to this direction. Now it was the end of Q1, so there's always going to be some funny trading activity that these institutions and banks and market makers are doing, but at the same time, just take note of this. Look at how solid and strong this was here, and that's something I'm also going to be taking note of. As you guys can see from the week prior, again, this right here, I'm not going to ignore it as much, or I will look to put more size on, because I didn't have the size I would have liked to have. And that's the purpose of why I did this video, as well as why I take so many notes, because I've taken this trade before, many times before, within QTA over the past 8 months or so, but still yet I'm still trying to understand, why am I not putting more risk on the trade? Personally, it's just, it should not be a lotto as I am, kind of labeling it as. That's something I said here. Small position for a lotto play. This is me just trying to push myself as I'm sharing this information with you guys. It doesn't need to be a lotto play. We have enough data now. We've seen it play out more and more to know that this can be an actual viable, credible, strategy to run and take. And lastly, this would be the Quant Trading App Friday. So we can pull up the GEX in the advanced GEX graphs. And in the archive GEX graphs, we can see the price action on Friday here. This would be the 31st. And just to see if there's any clues for what happened. So we have 405.50. Market ends up pushing up to 407. So from pre-market, what clues did we have? We can see that 407 was right here. And then we had a decent amount of open interest, as well as some positive gamma at 410. But the thought process would probably be, if the market was to rally, it would probably struggle around here, because the GEX kind of falls flat. And then as we jump forward, you guys can see, so we have 405, and I'm just going to jump forward in time, 405, 405, 405, 406. 406, you see this level is growing now as we get to 406, 406. Now we have 407. So at 407, you guys notice that something interesting happens. We can see 410 starts growing. That is a sign that there's potential that this level might actually break. It's likely going to consolidate around 407 now, because 407 was pretty dominant from pre-market. But now that we're actually here, the market just made this really big push up. We would expect it to consolidate. Now, if price is holding over this level and we see positive gamma increasing out here, that's a sign that we're probably going to continue going higher. You guys can see it's positive. It's still growing. This is now 12:30 Eastern time. And then as we see, still positive, still positive, still positive, still holding. It's holding this level. And then we can see that it's still hovering around this level right here. This level is still growing, and what do we get? So now this is at 2:30 p.m. Eastern time. We can see this level pulls back just a little bit, but then it pushes up again, and then the market ends up making end of the day rally here all the way up to 409. So if we look at the charts and we end on that, we can see, let's go back to the, let's go to this SPY, and we ended up closing at 2 sigma, which is already pretty rare for a case here within Quant Trading App. But this is the level right here, 407, identified from pre-market. It consolidates around this whole time, but as it's consolidating, we can see the positive gamma growing up here, and that's something that is usually an indication that we might break this level. So if you're a scalper, you can just set your, just your traditional resistance and then look for the break and then take the scalp up for the end of the day. 0DTE options are pretty cheap. If we take a look at what the QTA intraday levels were, this is what it looked like here. So you can take the break right over that level. And that's exactly what we're seeing right here. So guys, hopefully you love this video. These are taking up a lot of time, obviously, as you can imagine, to organize and put them out there. If you guys are learning from them as a QTA member, I will continue to do them. If there's not that much feedback, then obviously I would like to save some of this time, as I do this already for myself and my notes, but I have to refine them a little bit to actually put out there on YouTube just so it makes sense as opposed to my doodles. So again, leave a comment down below, like the video, share it. I look forward to hearing from some of you guys in some of the gold members within Quant Trading App. Link is in the description to Quant Trading App itself if you're interested in these levels, as well as the gamma levels, and getting a little bit more of understanding to how to trade spreads, predominantly butterfly spreads as of late. It's been the option strategy that I've been trading the most, as well as a lot of the newer members within QTA are finding a lot of success. Thanks for watching, guys. I'll catch you in the next one. Take care.